Welcome to Countarts. In this lesson, we're going to be looking at question 2 of an accounting paper for grade 10. This is for 2023, paper 1, November 2023, that is. So we'll fly through it. We'll go quickly through it. This is on doing the statement of comprehensive income or the income statement. We've done another lesson, by the way, on that. You'll find the link to that lesson in the description below. So let's have a look at this one here. And I'm confident that even though we'll move a bit quicker on this one here, the principles that we're going to explain will help you get the answers, or will help you know how to tackle such a question. It's actually a very easy question to do, although it's something that's not only done by grade 10, you'll see grade 11, 12, and even first year and second year of undergraduate also do very similar questions when it comes to doing the statement of comprehensive income. Okay, so let's have a look at this one here. They have given us an answer book. As you know, grade 10 to 12, there is an answer book that you use to put your answers. So I've just duplicated that into Excel to make it easier, at least when it comes to calculations. So I'm not going to be showing the calculations in brackets, but you'll see as we'll be calculating using the Excel formula. So let's have a look at this one here. We are asked to prepare the statement of comprehensive income, or the income statement, that is, for the year ending 28 February 2023. So the first thing you want to take note of is the date, 28 February 2023. So if my financial year end is 28 February 2023, then it started on the 1st of March 2022. Remember, this is the statement of comprehensive income. What do we record in the statement of comprehensive income? We record income and expenses. And income and expenses are those that we have earned, that is for income, and incurred, that is for expense, only within this 12-month period that I've just mentioned, from the 1st of March 2022 to the 28th of February 2023. Anything outside of that will not go into our income statement. That's a very important statement that you need to know, you need to remember. Anything outside of my 12 months will not go into the income statement. And you'll see, in fact, there is a scenario here where it involves amounts outside my 12 months. So I have to remove it from my expenses if it's an expense, and from my income if it's an income. Okay, so that's a very important thing to note. If my year end is 28 February 2023, I need to count 12 months back. That would be the 1st of March 2022. Now that I know that, I can do my question. Now remember, when you're asked to do a statement, usually what they will do is that they will give you the trial balance, and they will also give you additional information. All right, and here it's written adjustments and additional information. And so when you're doing the statement of comprehensive income, you're not only looking at your trial balance, you're also looking at additional information, because they may affect some of the amounts in the trial balance. They may not always affect it, but for some of the income and expenses, it will affect. Okay, so where do we begin? Remember, the income statement items usually go under the nominal account section. So anything under the nominal accounts will be an income statement item, all right, or the statement of comprehensive income item. Okay, so if you hear me saying income statement, I'm referring to the statement of comprehensive income. It's the same thing. So we'll mainly focus on the nominal account section. However, there are a few items in the balance sheet section which mainly capture items which go into our balance sheet, but they also affect our income statement, as you will see shortly. So when I give you this theory, I'm not just passing time, I'm just telling you what is important for you to bear in mind, to have in your mind, because when you're in an exam situation, you are racing against time and you have to do everything accurately. So you need to at least have a bird's eye view of what your question looks like and where you will get your information, what you will ignore and what you will focus on. Okay, so let's go ahead and do this. It's easy when you're in high school, because when you're given the answer book, you're really given the format. But if you're an undergraduate, usually you have to do the format yourself. So high school gives you at least a good foundation for you to understand and to grasp the format or the template of the different statements. So here is the format that we're given. It begins with sales, and then you have cost of sales, and then gross profit. And so this is easier for you because you're already given the answer book with these items here. So let's begin. Sales is the first one, as you saw there in the answer book, and we are under the nominal account section. Sales 588,000 rand. Now I can just put that in. However, I need to check in my trial balance. Usually it will either be in the trial balance or in additional information, anything that affects my sales. And I can already tell you there's one thing that usually affects our sales. If our customers returned goods to us, then we have to remove that from sales or deduct that from our sales. Why is that? Well, because the sales return, it's no longer a sale as we had initially recorded it. It's a sales return. Okay, so let's look for that here. You've got cost of sales under that, and then you've got debtors allowances. Well, what does that mean? Well, you need to understand what the word debtors mean. The word debtors mean those to whom you sold on credit, okay? Those who owe you money. You sold to them on credit and they owe you money. But when it says debtors allowances, it's actually referring to those whom we sold to on credit and they have now returned the goods back to us, and so that is no longer a sale, so we have to deduct that from our sales. Sometimes you will see it as sales returns or trade receivable allowances, so you just have to bear in mind those different jargons that may be used. Okay, so if it's sales returns or debtors allowances or trade receivables allowances, we'll deduct it. So we're going to take 588,000 rand minus 6,800 rand. Okay, so let's do just that for our sales. 588,000 rand minus 6,800. There we go, 581,200 rand. Okay, so that's our sale. So let me just make the formatting look better. There we go. Now we can do the cost of sales. Our cost of sales is given down here, 420,000 rand. Usually when you're given the cost of sales, it actually indicates that this is the perpetual inventory system and not the periodic inventory system, where you have to calculate opening inventory plus purchases minus purchase returns minus closing inventory. Then you get cost of sales, but here you're already given the cost of sales. And so I'm not going to be technical. This is a grade 10 paper, so I don't want to introduce something that you may not have looked at in your studies. So cost of sales 420,000. I have to look at adjustments and additional information. If anything is mentioned pertaining to cost of sales, then I would have to take that into account. Okay, and I've gone through this paper before, so nothing is mentioned regarding cost of sales in additional information. Usually, actually, with your sales and cost of sales, any additional information or any additional calculation that you'll have to do will be contained in the trial balance and not necessarily in additional information. That is almost always the case. Okay, so for cost of sales, usually you'll be looking for purchase returns, but since this is the perpetual inventory system where you're given the term called cost of sales, you really won't have anything for cost of sales. So you're just going to take the 420,000 rand. So I'm going to put that down here, 420,000, and then I calculate what my gross profit is. That's my sales minus my cost of sales, gives me my gross profit, and here it is, 161,200 rand. Next, we do our other operating income. The first one is given there, other income, 10,150 rand. Where did they get that? Well, under the nominal account section, you can see here on the credit side. Remember, all our income will be sitting on the credit side under the nominal account section. Okay, so we will see here 10,150. Commission income has already been put for us there, so we didn't have to do anything. So in fact, what I'll do is that I'll just highlight the ones that we've done. You may be using your highlighter, and so it's good practice for you to be highlighting as you go along, so that you know which one you have done and which one you have not done. Okay, commission income was done for us as well. Okay, so we know at least which one we have already done, or we don't have to look at again. Okay, so commission income, and then you can see there's a space for one more income here. So what could that be? Well, let's have a look at our credit side. Remember, all our income will be sitting on our credit side, all our expenses will be sitting on our debit side. That is under the nominal accounts section, right? Under the balance sheet, you've got your assets on the debit side, and you've got your liabilities and capital and your contra asset accounts. Okay, that would be your accumulated depreciation and your allowance for credit losses if you have it. Okay, but that's just a theory on the side. So let's have a look. You can see here rent income, there is 6,200 rand. Okay, so that definitely does affect our other operating income. And then you can also see down here there's another income of 1,620, and that is interest on fixed deposit. Now interest, whether it's interest income or interest expense, doesn't actually go under other operating income. All right, it goes down here after operating profit. Okay, so after operating profit, you'll have here interest on fixed deposit. So in fact, let me just put it there for you now so that you can see interest on fixed deposit will go down here, and then interest expense will be down here. And you can see the format already gave it away because it was written here on top, profit before interest expense. So I know the next thing is interest expense. But why did I mention this interest? Well, because interest on fixed deposit is an income. So what income goes under other operating income? Well, it's commission income, which we're given, and rent income, because that's the only other income I'm seeing on the credit side, because we've already taken into account sales. We have rent income here, commission income has already been taken into account, and interest on fixed deposits is the other income. But as I mentioned, it's not an operating income. It goes after operating profit. All right. So let's do our rent income, 36,200 Rand. But let's look at our adjustments and additional information. Now, rent income usually and almost always will have a note regarding the rent income. So they will tell you the tenant paid for an extra month, or he has not paid yet for February 2023, and we need to take that into account. So let's have a look here, and you can see here we have a note on rent. Okay, we are told that the rent for February 2023 has not yet been received. Okay, so we know we've received rent for how many months? Well, if our financial period began on the 1st of March 2022 and it ends on the 28th of February 2023, and we have not received for February 2023, it means we have received for 11 months. Okay, so that should be from the 1st of March 2022 to the 31st of January 2023, because we have not received for February yet. So I know I'm dealing with 11 months. But we are also told here that the rent was increased by 300 Rand per month with effect from the 1st of July 2022. So here's what I know from what I'm given. This rent income of 36,200 Rand is only for 11 months. So I need to figure out how much is it per month, all right, so that I can add the one for February as part of my rent income. I hope that's clear enough. You can rewind and re-listen to it if you need clarity on that. But basically what I'm saying here is that if you have not received for 1 more month or even 2 more months, but in this case it's for 1 more month, we need to figure out how much that rent income per month is and add it to the 36,200 Rand to make it the rent income for 12 months, because that's what we've earned. Okay, so remember, another thing to note is that my income and expenses, it doesn't matter whether it's been paid for or not. And so remember, we are told here that the rent for February has not been received, so the guy has not paid us yet. But that doesn't mean that it's not an income until we receive the money. Okay, and that's the mistake that might be made, where you think if you have not received the money, it's not part of rent income, I will ignore it. No, that's not the case. The rule of accounting, and we're following the accrual rule of accounting here, where we're saying that we record transactions as they take place and not necessarily when there's movement of money. So how are we going to figure this one out? There's a small complication with this scenario here, because we are told that the rent was increased by 300 Rand per month with effect from the 1st of July 2022. So here's what I can already tell you. If we didn't have this 300 Rand increase in our rent per month, then I could have simply taken my 36,200 divided by 11 months and I'll get my answer. But the problem is that is not the case, because our rent income didn't stay constant per month from the 1st of March 2022, because it was increased with effect from the 1st of July 2022. I hope it's making sense. What I'm saying is that if your rent was increased midway, you can't take what you're given and divide it by the number of months for which you have received the rent. No, you have to figure out what is my current rental income per month. So here's how I would go about doing it. And there are a couple of ways you can actually do this. All right. So we know that our rent increased by 300 Rand from the 1st of July. Okay. So here's the formula that I can give you. In fact, there are 2 ways that I will show you on how to do this calculation. Okay. Like I said, you can't simply take 36,200 Rand divide by 11 months and then you get the rent per month and then you add the 1 month's rent to the 36,200. That would be incorrect, because our rent increased midway. That means we're not having the same amount of rent per month from the beginning of the financial year, that is. So the first thing that I want to calculate is total amount received, right? And this one, by the way, we are given. Okay, so total amount received. How much have we received? We have received 36,200 Rand. How do I know that, or where did I get that? That's in my trial balance, all right? So you can see here we received 36,200 Rand for rent income. Okay, so I know how much I received. Let me even write the formula first here of how we calculate the 1 month's rent that we need to add to our 36,200. You will take total rent received minus total rent increase, okay, and then you divide it by number of months received, okay, number of months for which you have received your rent. Okay, so here's how we'll do it. Total rent received minus total rent increase. What is the total amount received? We've received 36,200. That's what we know. It's sitting in our books. It's in the trial balance. We know that. Okay, what about the total rent increase? Okay, so less total rent increase? Well, let's go back to our question. We're told that the rent was increased by 300 rand with effect from the 1st of July 2022. Okay, so here's what I know. My rent was increased by 300 rand from the 1st of July 2022, and I've received rent with the increase from the 1st of July all the way to the 31st of January 2023. So how many months are those? Well, that would be July, and I'm counting July because it's from the 1st of July. July, August, September, October, November, December, January. Those are 7 months. So I know the 300 rand increase in my rent was received for 7 months. Okay, so I need to take my 300 rand times 7 months. Okay, times 7 months, and I put it as a negative. Okay, so I know my total rent increase. Okay, so don't get lost. What are we trying to calculate here? We're trying to calculate the rent for 1 month, and here's the formula that I just gave you here. So total rent received minus the total rent increase, which we have just calculated, and then we divide that by the number of months received, and you'll see how just now. Okay, so total rent received 36,200 less total rent increase 2,100, which we got by taking 300 rand times the 7 months for which the increase took place. Okay, and then I'll get my amount here, 34,100 rand. Now what do I know? I know that this is how much rent I would have received in total if I didn't increase my rent at all. Okay, now what do I need to do? I need to divide this 34,100 by the number of months received. Okay, so 34,100 divided by how many months have I received my rent for? Well, I've received my rent in total for 11 months. That's from the 1st of March 2022, from the beginning of my financial year until the 31st of January 2023, because I haven't received for February yet. So I'll take that divided by 11 months for which I have received the rent. Okay, and then I will get my answer of 3,100 rand. Okay, I'm not done yet. All right, so this is my rent per month before increase. Okay, now I know this is my rent per month before increase. But what is my rent per month after increase? Well, that is such an easy calculation to do. My rent per month after increase will be the 3,100 plus the 300 rand increase. Now I have my rent of 3,400 rand. That is my new rental income after the increase. So I know this is what I have not yet received for February 2023. So I need to add that to my rent that I've received so far, 36,200, and then I will get my total rent income. So I'm gonna write here rent income and then put my answer of 36,200, which is how much I've received for 11 months, plus the rent per month after the increase, and this is for February 2023, and I get my 39,600 rand. Now this is an easy way you can calculate it, especially if you don't have a mathematics background. Right, there's another way you can calculate it, but you'll need a bit of a maths background to do this, and that's why I could show you this simple formula that you can use. Okay, I hope it's clear enough. If you're confused along the way, you can just go back and rewatch those parts. All right, now let me show you the second way, and this one here requires you to know a bit of mathematics, because now we are solving for x. But before I do that, let me just fix my formula up here just to add one more thing. It's total rent received minus total rent increase divided by the number of months received, and then that let me just put my brackets here. I will have to add plus increase per month. Okay, so don't confuse the total rent increase with the increase per month. The total rent increase is how much we increased it by in the whole financial year, but the increase per month is how much it is for each month, and that's the 300 rand. Okay, so now that formula, this formula that I've just put down here, is going to give you 3,400 rand. So let me just do this to make it visible. Okay, there we go. So that's going to give you the 3,400 rand that we need for February 2023. Now let's go into our mathematical formula, which is quite simple. If you understand it, it might be even quicker than what I've just shown you above, but the one above will work if you don't want to deal with mathematics. Okay, so let's solve for x here. X is how much my rent is for each month after the increase. Okay, so here's what it's going to look like. I'm going to take for how many months did I receive rent in this particular financial year before the increase. Okay, for how many months did I receive the rent before it went up? Okay, so we know that our financial year began on the 1st of March 2022 all the way until February 2023. So from the 1st of March 2022, how many months were we receiving this rent, or were we due to receive this rent before it went up? Well, that is March 2022, April 2022, May 2022, June 2022. Those are 4 months. Okay, so we received rent before the increase for 4 particular months. So here's how our formula is going to look like. 4 multiplied by the x. Okay, in this case I'm just going to use the letter r, and that will be representing our x. Okay, by r I mean the rent. Okay, so 4 times the rent before the increase plus how many months did I receive the rent after the increase? Well, we had calculated that already before. That's 7 months, from July all the way to January 2023. 7 months. Okay, so plus, and then I'm going to put here 7, and obviously it's going to be multiplied by r plus the increase of 300 rand, and that will give me the 36,200 rand. Okay, so that's my formula. Okay, so if I work out this formula, I'll be able to get my answer. Okay, so 4 times r, meaning how much I received before the increase, and then we add the number of months for which I received the rent after the increase, multiplied by the r, which is the rent income per month before the increase, plus the increase of 300 rand, and that gives me 36,200 rand. So how do I work out this formula? Again, this is mathematics, as I mentioned, so if you'll struggle with it, you might want to brush up a bit on your mathematics. Otherwise, you can stick with the first formula. Now, the good thing about this mathematical formula is that when you're given a scenario where you're not given the increase in rent amount, okay, you're not told it's 300 rand, they might tell you the increase was 10% or 5%. This one will still work the same way. Okay, you just plug it in. So let's use this formula. Okay, so I know that 4 multiplied by r is 4r, so I'm going to put 4r there, plus 7 multiplied by r is 7r, and then we add 7 multiplied by 300. 7 times 300, that's 2,100 rand, right, plus 2,100 rand equals to 36,200 rand. Okay, so I'm working out my formula here. All right, so already I have 2 numbers with the r. Okay, 4r plus 7r. So 4r plus 7r will give me 11r. Okay, so I'm gonna put 11r, and then we've got 2,100 rand here. Okay, so 2,100 rand, since I'm not solving for r, or it's not attached to the r, I can just move it to the other side and it becomes a negative. So 11r equals to 36,200 rand minus the 2,100 rand. Remember mathematics, if I move it to the other side, it becomes a negative. Okay, now what is my answer? I know that my 11r equals to, what is 36,200 rand minus 2,100 rand? That will give me 34,100 rand. Okay, so I've got 11r equals to 34,100 rand. Now I can just solve it. Okay, so now I want to isolate the r here. How do I do that? Well, I will have to move the 11 to the other side, but when I move it to the other side, it becomes a denominator. Okay, so it's going to be 34,100 rand divided by 11. So r equals to 34,100 rand divided by 11. Okay, so there I have solved my r. So my r equals to, what is 34,100 rand divided by 11? That will give me an answer of 3,100 rand. So I'm going to put here 3,100 rand. Okay, now that gives me how much my rent was before the increase, 3,100 rand. Now all I need to do is to add my 300 rand. So 3,100 rand, so that's the last step. 3,100 rand plus 300 rand will give me my answer. Okay, 3,100 rand plus the 300 rand will give me my answer of 3,400 rand. Okay, there we go. Now we've got our answer for February. So those are the 2 ways you can calculate your rent per month after the increase. Okay, and just add it to whatever is outstanding. Okay, and we've done that already here. So I was just quickly showing you that. If you want to take the time and master the 2, or just stick to one that you're comfortable with, you can do so. Okay, so let's move right along. So we've just completed rent income, so let's highlight that one. Okay, and that was the only other operating income. And so now we're going to other operating expenses. So we've got salaries, stationery, and advertising already put down for us. So let's highlight them. We've got salaries, we've got stationery, and we've got advertising. And so those ones that are given to us or that are already put down for us means that we don't have to do anything, okay, regarding those specific accounts. We are just going to leave them as is. But now the ones that are not recorded, so for instance, now let's go down in order. I forgot to highlight debtors allowance here. We had already done that when we deducted it from our sales. So insurance, remember we're dealing with the nominal account section here, but you'll see which accounts actually affect the balance sheet account section, as I mentioned previously, but we are going to focus on nominal account section since we're doing the income statement. Insurance, 12,500 Rand. Now one thing I want to do is to check, am I given anything regarding insurance and adjustments and additional information? If I am, then I need to take it into account, okay, just like we did for rent. In fact, let me highlight that point where we already dealt with rent. Okay, so let's see, is there anything on insurance? I can see here number 4. Insurance includes an annual premium of 3,960 Rand paid for the period 1 September 2022 to 31st of August 2023. Now, usually when it comes to insurance, seems like everyone brings this scenario in a very similar fashion. And so if you understand this statement here and how to do it, you'll almost always deal with it, because I've never seen a different scenario to this, where they give you this scenario where you've paid for a full year from a specific date to a specific date. But remember, our financial year begins on the 1st of March 2022 all the way until the 28th of February 2023. Anything outside of that is not an income nor an expense. In this case, we're dealing with an expense, insurance, and we know that if we paid for anything outside my financial period, I have to remove it from my insurance, okay, because it's not an expense. In fact, it is what we call prepaid expense, which is an asset, in fact, and it will go into the balance sheet and not into the income statement. So what you're seeing here is that we paid 3,960 Rand. So you can see insurance here, we've got 12,500 Rand. It means that this 3,960 Rand is already included in this 12,500 Rand. All right, so don't confuse things. I know many are always confused. What's the connection between the 12,500 and the 3,960? Well, it's already included in here. So we need to remove the portion of the insurance that we've paid for the period outside our financial year. Okay, so how many months have we paid for outside our financial year? Well, we've paid for March 2023, April 2023, May 2023, June 2023, July 2023, and August 2023. So those are 6 months that fall outside our financial period. Okay, the rest from the 1st of September 2022 until the 28th of February 2023, those ones are fine. We incurred that insurance because it was within our financial period. But for the other 6 months, it was not in our financial period. So I need to calculate what those 6 months are and then remove it from my 12,500 Rand. So let's do just that. Okay, so I'm going to write here insurance, and I'm going to take my 12,500 Rand minus, and I open my bracket here, so I'm just showing my workings here. I will take what is the amount? The amount is 3,960 Rand times 6 divided by 12. Remember, it's only for the 6 months that fall outside my financial period, so I want to remove that. That's why it's a minus here. Okay, and then I will get my answer, 10,520 Rand. That is how much my insurance is supposed to be, and not the 12,500, because the 12,500 includes a payment for months outside my financial period. And that's how easy it is to deal with the insurance when you're given such a statement in additional information. So we're done with that one. So let's highlight our insurance. And you can see how helpful highlighting is, because it helps you see what you have not done and what you have already taken into account. Okay, next we have bad debts. Remember, the order in which you do it does not necessarily have to be the same as mine or even as the solution. You could have started by looking at additional information, by starting with water and electricity, as long as you're putting it in the correct place, of course, in the format. But it doesn't have to follow a specific order. Okay, so I'm just following the trial balance going down. So I've got bad debts coming up next, so I know that there is an expense, so I'm gonna put it here. Okay, and the amount we are given here is 4,800, but we have to look at additional information and see if there's anything regarding bad debts. For the sake of time, I'll just show you. It's here. We are told Adam, a debtor who owed 1,200 rand to Sebenza Traders, was declared insolvent. They'll always use words like those: declared insolvent, or his amount was considered irrecoverable, or you decided to write it off because you cannot find the debtor any longer, or is inaccessible. His estate was able to settle half of the amount owing, write off the outstanding amount. Okay, so this guy owed us 1,200 and he can only pay us half of that. Okay, so half of 1,200 is 600 rand. So the other 600 rand has to be written off. Okay, so I'm going to add that 600 rand to the 4,800 rand. So it's going to be 4,800 that we're given in the trial balance plus the 600 rand that we have to write off. Okay, and that will give us 5,400 rand. So let's highlight that. That was easy enough to do. By the way, the other 600 rand that they actually paid us is not going to affect our income statement. Okay, that would affect our balance sheet because we would increase bank. Remember the journal entry, debit bank when we're receiving money, and then we would credit, in this case, trade receivables. Those two accounts are balance sheet items because they are assets. They are not income nor expenses. That's why we didn't deal with the other 600 rand that was paid to us. Okay, next we have water and electricity. So I'm just going to copy that, put it down here, and we have 19,100 rand. But what note do we have? Note number 1, the water and electricity account for February 2023 has not yet been paid. 1,800 rand. Very easy to do. If we have not paid for February and we are given that amount, we just need to add it to the 19,800 in the trial balance that we are given. Okay, so 19,100 plus 1,830. So I'm going to put that here, plus 1,830 gives me 20,930. Very easy to do. So I'm just going to highlight them, the one in the trial balance and my additional information. All right, let's continue. Bank charges 4,200 rand, but we have to look at additional information to see what we are given regarding bank charges. And if you scan through, you will see here we've got the bank statement for February 2023 reflected the following: EFT fees 170 rand, that's definitely a bank charge. Credit card levies 90 rand, that's definitely a bank charge. Interest on current account, is that a bank charge? Well, no, that is interest 220 rand. So the only bank charges we have here is the 170 rand plus 90 rand, and of course we're going to add it to this 4,200 rand that we are given in the trial balance. Okay, so it's 4,200 plus 170 plus 90. Okay, and that gives us an amount of 4,460 rand, and we're done with bank charges. Now the only confusion you might have there, or a common mistake that is made, is to add all three, including the interest on current account. Remember, interest has to be recorded as interest and not necessarily as part of bank charges. Okay, so let's highlight that, and I'm not going to highlight the interest yet because I've not taken it into account. Okay, next, packing material. So we've got packing material there, and the amount is 7,100. Now we need to check our additional information to see if we are told anything regarding packing material. And up here, number 3, we are told packing material is 1,950 rand, and we are told according to a physical stock count on 28 February 2023, the following items were on hand. So what do we do with that? Well, it's easy. Usually when we buy packing material, we record it as an expense. But at the end of the financial year, if we have any packing material left, and by the way, the same thing applies to stationery. Okay, if we have anything left, stationery on hand or packing material on hand in this case, we have to deduct it from expenses because it's not an expense. If it's remaining at the end of the financial year, it actually becomes an asset. Okay, it goes into your balance sheet. So we need to remove this 1,950 rand from this 7,100 rand. So it's going to be 7,100 minus 1,950, which is packing material left at the end of the year, and it will go into our balance sheet. But we are only asked to do the income statement in this case. So 7,100 minus 1,950. Okay, easy enough. Like I said, you may be given stationery or printing and stationery, and you're told that stationery on hand at the end of the financial period was such and such an amount. You need to remove it from the rest of the amount that you're given in the trial balance or the pre-adjustment trial balance. So let's highlight this one and also make sure we highlight here. Okay, next we have interest on fixed deposit, but we'll come back to that, okay, because that comes after we record all our operating expenses. And so that's why I said it's quite easy when you're in high school and they've given you the format and you know how many spaces you have. So you can see there are 3 more spaces left here, apart from the interest on fixed deposit that we have not taken into account. But you can see that we need to record 3 more things here. It makes your work easier to say, okay, there are only 3. All right, what could those 3 be? Well, let's go through the adjustments and additional information and see what we can gather. Number 2, stock with the selling price of 2,520 Rand was donated to a local orphanage. No entry was made. All right, so if you donate your stock or you donate any of your other assets, it could be a vehicle, it could be equipment, furniture, whatever the case is, you need to record that as an expense. And what is that expense? That's called donations. But here's the thing. When you're recording your donations, you have to record it at the amount that it costed you. Okay, so if I'm donating inventory or trading stock, I need to ask myself, how much did it cost me to buy that inventory or trading stock? That is the amount at which I'm recording the donation. Okay, so whether it's a donation or the owner took goods for his personal use, which would be drawings, we record it at the price at which we bought it, not at our selling price, because we're not selling it, we're donating it. And so the expense amount there will be how much it costed us. Now we're told here that the stock with the selling price of 2,520. So they've given us the selling price. They have not given us the cost price. We want the cost price. How much did it cost us? Well, that's where this information comes in here. In fact, that's the role it plays here. The business uses a markup of 40% on cost. So if we're using a markup of 40% on cost, that means that markup of 40% has already been factored in here. It's already been added to the amount to get the selling price of 2,520. Now we need to work backwards and say, how much did it cost me? It definitely costed me less than the 2,520. So I need to check how much that was before the markup. Okay, so I'm going to write here donation, and the amount there is going to be the 2,520. 2,520. If you're dealing with a markup here, you'll multiply it by how much is your cost, my cost, or how many percent is your cost rather. It's 100%. Okay, so if you have a markup, your cost is 100%, and then I divide that by how many percent is this amount here. Well, it's the 100%, which is my cost, plus the markup of 40%, which gives me 140. Okay, so it's the amount times 100 divided by 140. Okay, that's how you do it. If you want to understand more on markups versus margins and how you do the calculation, we've got a lesson specifically for that. You'll find it in the link in the description below. So I'm going to press enter, and there I've got my donation of 1,800 Rand. Okay, so my donation is worth 1,800 Rand and not the selling price that I was given of 2,520 Rand. Hope that's clear enough, so we can move right along. Now, before I highlight this one here, I'm gonna have to come back to it, okay, and I'll explain why just now. So you can see we've highlighted everything here with the exception of interest on fixed deposit, which is not an operating expense. It's after the operating profit, as you can see here from the format as well. Okay, so what do we need to do here? Well, we need to check what other information are we given that will go here. Okay, we've got 2 more spaces here. Let's look at our information. Number 3 tells me, according to a physical stock count on 28 February 2023, the following items were on hand. What do we mean by physical stock count? Well, remember, you are recording your inventory or your trading stock in your books regularly, okay? You're updating your books, but at the end of the financial year, you went to your warehouse or wherever you keep your trading stock and you physically counted them to see how much they are worth, okay, what their value is. And you found that actually their value is 41,000 Rand. Okay, but what we have in our books is here under the balance sheet account section. Remember, I said there are some items which will affect your income statement from the balance sheet account section. This is one of them, okay, where you are looking at your trading stock and you're seeing that it's recorded as 44,000 Rand according to my books, but when I physically counted my trading stock, it was only worth 41,000 Rand. What does that mean? It means we have a trading stock deficit, or we may have a trading stock deficit. So if the one in your trial balance is more than the one in your additional information, you have a trading stock deficit. But if the one in your trial balance is less than what you have in your additional information, then you would have what is called a trading stock surplus, which is an income, and it will go under other operating income. So if you have a trading stock surplus, it would have gone here under the other operating income. Okay, but let's figure out whether it's more or less. Okay, so we've got 44,000 rand in our books, but remember, we donated some of the goods and we're told no entry was made, so we need to make that entry. Okay, so here's what it should have been in our books. Okay, it's the 44,000, so I'm going to write here trading stock, right? According to our books, we've got the 44,000 rand minus the one that we donated, 1,800 rand, gives me 42,200 rand. That's how much it's supposed to be. But when I physically counted the goods, I actually found it to be 41,000 rand. Okay, so stock count, I'm gonna put 41,000 rand. Okay, so if my stock count is less than what I have in my trial balance, okay, then we have a deficit, as I've just mentioned. And how much is my deficit here? It's 1,200 rand. Okay, so this is what I will call trading stock deficit, and I'll write it down here: trading stock deficit, otherwise known as trading inventory deficit or inventory deficit or stock deficit. Okay, same thing. So I'm going to put my 1,200 rand. Okay, I hope you're seeing how we do the calculation. The only thing that was an extra step here is the fact that we donated some inventory and we didn't record it. So we needed to remove it first and see what was supposed to be lying in our trial balance, and then compare that to our physical stock count and see what's the difference. If our physical stock count is less, we have a trading stock deficit. If it were more, as I mentioned, it would have been income, trading stock surplus in that case. Okay, now that we are done there, we can highlight number 2. We can also highlight number 3 completely, right? So let's keep moving. We're given another one here which we have not highlighted: the loan statement received from Sub Bank on 28th February 2023 reflected the following: balance on 1 March 2022, repayments during the year, interest on loan, and balance on 28th February 2023. Okay, so we're already doing the interest expense, so we might as well get it over and done with. Okay, so we're told that it reflected the following: we owed 150,000 rand. Okay, and at the end of the financial year we owing 117,300 rand. So what's the difference between the two? Okay, so let's see here: loan repayment, we've got the 150,000 rand which we owed at the beginning of the year, 150,000 at the beginning of the financial year, minus how much we now owe, 117,300 rand, 117,300. Okay, and you can see for the loan itself we paid 32,700 rand. Okay, however, you can see here that the repayments during the year, we actually paid an amount of 46,200 rand. They're asking us what is the interest on the loan, okay, that was capitalized. So if we paid a total of 46,200 rand, why did my loan only reduce by 32,700 rand? Well, the difference between what we actually paid and how much actually it was reduced by is the interest. Okay, they charged us interest. So the actual repayment is 46,200 rand, 46,200. Okay, so what is my interest? My interest is the difference between the two, 46,200 minus the 32,700 rand, 13,500 rand. So 13,500 rand is my interest. Remember, you look at how much did I owe at the beginning and how much do I now owe at the end. You look at what the difference is between the two, and that will mean how much you paid for the actual loan. And then if you compare that to how much you actually paid, the repayment, you will see, okay, did I pay more than how much my loan reduced by? If that's the case, the difference is usually due to the interest. So I'm going to put here my 13,500 rand, and I'm going to put it as a negative. Okay, all right. Now that we have that, what else are we left with? Well, let me just highlight here. Let's completed this one. Okay, we are told here, provide for the outstanding interest on fixed deposit. Interest is not capitalized. Okay, provide for the outstanding interest on fixed deposit. Interest is not capitalized. So where are we going to get that information from? Well, from the balance sheet section. You can see here we have a fixed deposit at 9% and the amount is 24,000 rand. What does that mean? It means so if I take we have invested 24,000 rand in a fixed deposit, then we're earning 9% per annum. Rand times 9% it gives me 2,160 rand. It's a positive because it's an income. Okay, 2,160 rand. And you can see here my interest on fixed deposit is only 1,620 rand. It should be 2,160 rand. Okay, I don't have to do anything else here. I just needed to do that for the income statement. However, if I were asked to do the balance sheet, then I would have to look at the difference between this 2,160 rand and the 1,620 rand. That difference will actually be accrued income, okay, a current asset, meaning money that I'm yet to receive, that is due to me. But since I was only doing the income statement, I only need to take my fixed deposit amount, 24,000 rand, times the 9%, and that's how much I've earned for the year. Unless, of course, they give you a complication here, that you invested in the middle of the year or you invested towards the end of the year, you'll have to count the number of months. But since we don't have any of those information, we will just put this as our answer. And if you go down here, all right, before I complete that one here, you're seeing here the bank statement reflected the following: interest on current account. Now, here's where the question was not too clear, because the interest on current account could actually be an expense, all right, or it could be an income, okay? But in this case, it's an income, okay? But they had to be a bit clearer by that to say interest on credit balance, meaning a positive balance from the perspective of the bank statements. Then you would know that it's an income. But when they just say interest on current account, I don't know if the current account was negative, thereby the bank is charging me interest, or it's positive, thereby me getting an interest from the bank for having a positive amount, okay? But in this case, it's positive because that's what they put the solution as. And so that was not too clear there. But nonetheless, we're going to put the 220 rand and add it to this 2,160 rand, okay? So plus 220 rand. I hope you're seeing why I added it there and why you can add it to the interest income. Remember, your interest income doesn't only have to be from one source. You can't say interest income can only be from fixed deposit, okay? It can also be from other sources. In fact, you will just write here interest income, or I would write here interest income, as opposed to interest on fixed deposit, because if I put it as interest on fixed deposit, then I'm specifically going to put only the one for the fixed deposit. But I want to put all the interest income, okay, from all sources. And we had two: interest from fixed deposit and interest from current account. So I can highlight this one here for the current account as well, right? And that, and the one on fixed deposit. All right, so we can see here we have done almost everything, except we still have one more space here. And of course, you can see the only thing we have not done is depreciation. And depreciation is fairly straightforward. If you struggle with depreciation, we have a lesson specifically on that as well. You'll find it in the link in the description below. So let's quickly do this one here. On vehicles, 10% on cost. So I'm going to write here depreciation and do my workings. And then I put my vehicles, 10% on cost. If it's on cost, it's easy. My vehicles are worth 280,000 rand. So I'm going to take 10% of that, and that will be my depreciation for vehicles. So 280,000 rand times 10%, 28,000 rand. And then we have equipment, 15% per annum on diminishing balance method. Okay, so that's why you have a bit of an extra step. So diminishing balance method, I will take my cost of my equipment, 130,000 rand, minus my accumulated depreciation at the beginning of the financial year. And then the answer, I multiply it by 15%, and I've got my depreciation for equipment. So let's do that. Equipment, 130,000 rand. Let me open my brackets here. Minus my depreciation, accumulated depreciation rather, at the beginning of the financial year, 44,600. And then we'll multiply that by 15%. That gives me my depreciation for equipment. So, is there anything else? Well, we're told that an additional equipment with a cost price of 12,400 rand was purchased on the 1st of December 2022. The transaction has not yet been recorded. So we bought an extra equipment on the 1st of December 2022. So I have to calculate the number of months that I've had this equipment so that I know how much to depreciate it by. So we know equipment is on diminishing balance method, but if I bought it during the year, there's no accumulated depreciation at the beginning of the financial year for this specific equipment. So I'm going to write here additional equipment, and I'm going to take, how much was it? 12,400 multiplied by 15%, and then multiplied by the number of months divided by 12. How many months have I had this equipment for from the time I bought it until the end of the financial year? Well, it's December Remember, I bought it on the 1st of December. If I bought it on the 31st of December, I wouldn't count December. But if it's on the 1st, I have to count the full month. So December, January, and February. So those are 3 months that I've had this equipment. So I'm going to take 12,400 multiplied by 15%, multiplied by 3, divided by 12. That gives me 465 Rand. So my total depreciation for all my assets is 41,275 Rand. Okay, and I'll put that as depreciation. All right, so you can see I've done everything that I've been given as I have highlighted them. Okay, so let me highlight this one, and let me highlight interest on fixed deposit as well. And this is what I meant by nominal account section is affecting my income statement. All right, so you can see I've highlighted everything on my nominal account section, but I've not highlighted anything on the balance sheet account section. That's because I'm not doing the balance sheet. If I were doing the balance sheet, then I would have to look at the balance sheet account section. But remember, for you to complete the balance sheet, you needed to have also done the income statement. So everything in the trial balance really will affect your balance sheet. But the income statement, we're focusing on the nominal account section, of course, with the exception of those other accounts that we had to go to, like trading stock and the depreciation and the fixed deposit. Okay, now that I've done everything here, you may be asking, these expenses here, why didn't I put them as a negative? Well, that's because I'm going to draw a table here and then sum them up, add them all together and put it as a negative. Okay, so we have one amount for all my operating expenses. Okay, 139,855. Right, so that's how much I have for my other operating expenses, and then my other operating income, I just need to add them, that plus that, and I put it as a positive, right, because it's income. Okay, so my operating profit is going to be my gross operating income. And how do I get my gross operating income? I will take my gross profit plus my other operating income. Right, I've got my gross operating income, and then my operating profit is going to be my gross operating income minus my other operating expenses. I get my gross profit, and then profit before interest expense is of course going to be my operating profit plus my interest income. And then my net profit for the year is going to be my profit before interest expense minus interest expense, and that gives me an amount of 59,900. Okay, so in this particular question, you don't have to calculate your income tax, but depending on what level you are doing, you will have to calculate income tax. So you may be given the income tax rate, or you may be given the income tax amount, and you'll have to calculate that, or you have to put that just before you get to net profit for the year. Okay, so I'm just going to put the equal sign there, and here we go. We've just completed the statement of comprehensive income, or the income statement. I hope this was helpful. I hope you've gained value from this lesson. If you have indeed, please subscribe to our channel, like this video, and share it to those you think it might help. Now below this video, you can also see a button that's written join, and that's for membership, right? If you'd like to be a member and support our efforts, but also get some extra videos, some extra questions, and also access to the material that we've used, including this one here and many more of the documents that we use for all our videos, you have access to that as well. So if you'd like to join, please click on the button and do join as a member. Till next time, cheers.